Would you hold Dell stock for the next 20 years? Today we're going to validate the value behind Dell. I'm a data scientist and a professional value investor, and I'm going to record as I go through the latest annual report to pick apart and analyze the economic situation for Dell. Scrolling way up to the previous page, we see we're in a section titled VMware Spinoff. And what's actually saved the net margin for Dell in the latest annual report is the spinoff and purchase of the VMware subsidiary. A few weeks before this report was filed in November of 2023, VMware was fully acquired by Broadcom. Following the acquisition, Broadcom announced changes to its go-to-market approach for VMware products. That strategic shift actually caused Dell, just in January of this year, January 25th to be exact, Dell terminated all of its agreements between its divisions and VMware, now a separate entity, but that which just 2 months earlier had been another subsidiary. All the connections between Dell and VMware were severed all at once between the period of January and March of this year. This includes various administrative services which Dell provided to VMware on an interim transitional basis. All of those admin services that the headquarters of Dell was providing to VMware, which is now a separate company, well, it included this much capital expenditures, this much depreciation and amort, but it also happens to include the salaries of Dell headquarters people that are staying with Dell, but were previously providing services to VMware. That means that this stock-based compensation, which is the bonuses to salaries of employees, does not need to be paid anymore by Dell. You can see that this was the account for the year prior to the last year. And so since this is not expected to be needed going forward, it's actually been accounted for on the income statement as a reduction in SG&A. I wish I could show you that explicitly written out by Dell's own investor relations department, but I'm not actually finding it written out anywhere in the annual report. However, I am quite confident that that is what is affecting the income statement in the latest year. Some supporting evidence of that theory can be found in a later note, one that is usually a little bit messy, but this is the deferred tax assets. But at Dell, they have a second layer to deferred tax assets. If I scroll up here, we can see that these tables are actually called changes in the valuation allowance for deferred tax assets for the periods indicated. Now, that is a really gross table name, frankly. But as I'm parsing through it, it catches my eye to see a similar $800 million here, beginning balance change increases related to tax positions of prior years. A paragraph underneath that table gives us some context that Dell takes certain non-income tax positions in the jurisdictions in which it operates and has received certain non-income tax assessments from various jurisdictions. That isn't explicitly talking about stock-based compensation. However, a second paragraph in this same section gives different context, talking about different spats, different disagreements that Dell has had with the American IRS. The IRS protesting about Dell's 2015, 2016, and 2017, 2018, and 2019 income tax returns. I mean, that is half a decade of complaints at this point. Dell does disagree with the IRS's complaints and plans to contest the administrative appeals. All interesting and cool, but the related part to the SG&A reduction that we're looking for that may be related to the VMware spinoff, at least that's our working theory right now. Well, there's a little tidbit right here, a juicy little morsel. The IRS proposed adjustments primarily relating to certain transactions the company completed as part of its business integration efforts. This tells me that Dell has a history of shifting divisions, shifting employees across different subsidiaries in order to manipulate income on the income statement and therefore its effective tax rate. If the IRS is complaining about it year after year after year, looking again at this change to the deferred tax asset, increases related to tax position of prior years, it coincides within a margin of just a few $1,000,000 with the exact reduction in stock-based compensation being paid to VMware employees prior to the spinoff, or how much they were paid in the last full year before the company was spun off from Dell. All of this is needed to understand why revenue decreased. Sorry, $14 billion reduction in revenue. That's substantial. Yet the net margin improved dramatically. We actually are making more than $1 more per share on a diluted basis, despite that decreasing revenue. It's not efficiency. It's not economies of scale. It's not some genius maneuver. It is the disposal of a subsidiary named VMware being milked for immediate gain on the income statement. I don't see that as repeatable unless they're about to start stripping Dell for every single subsidiary, basically stripping the company for parts. This is not the sort of financial maneuver that you can expect to be repeatable. I do expect the net margin to decline back to what it was prior to the latest year. That's a net margin of about 2% rather than this margin of about 4%. But that's not the whole picture. In 2021, the net margin was over 5%. And so what we're really looking at here is revenue stayed almost the same between the 2022 season and the 2021 season, yet the business became noticeably less efficient, almost cutting in half of Dell's net margin in the 2022 season. Now in the latest season, 2023 season, revenue has declined, and even a temporarily boosted net margin is still lower than what it was back in the 2021 season. As we use all this information we've been piecing together to kind of settle in on what is the question we should have when it comes to Dell, I think the question looks something like this. What does management have to say about products revenue? And if we're lucky, are they going to talk to us about either the operating or ideally the net margin? Let's pop over to the management's discussion section of the 10K in order to look for these two things. Dell is a global technology company. Well, looking at services revenue broken up by its different segments, we have servers and networking revenue, then storage revenue. It is a little concerning not just that these declined, but that these declined by exactly the same percentage as they grew in the last season. Last season, they grew 14%. Well, now it's decreasing 14%. Last season, they grew 9%. Now it's decreasing 9%. That symmetry makes me uncomfortable. Now, it could be completely random, but a lot of times that sort of symmetry in ups and downs does tell me that revenue is not actually growing because of an increasing customer base. Revenue is going up and down based on the price that a enterprise software company is setting. This is very common in enterprise software companies. In this case, Dell is like an enterprise cloud company in this part of its business. What you want to see is you want to see revenue growing because of pricing power and increasing demand. This right here, not a guarantee. They're not explicitly saying it, unfortunately. This right here is a hint to me that it's only being driven by pricing power, which is not nearly as sustainable growth. In the note, they do actually explicitly say that the average selling price of these servers increased as a result of the impact of richer configurations. I mean, they can say something like that if they want, but basically they raised the price just enough to match what they had grown the last year in order to not get their bosses mad at them, I am guessing. But here's some additional analysis finally. From a geographical perspective, net revenue attributable to the client services group decreased mostly in Asia Pacific and Japan. So it's mostly the Asia business that's starting to reduce revenues for Dell, and to a lesser extent, America and Europe. So it declined everywhere, but interesting that they do call out Asia Pacific as a leader of the decline. Well, kind of steering us now into some sort of conclusion for Dell Technologies in the 2023 season. What is the value? What is going on economically with this business? What I'm seeing is a management that is taking credit for one thing, taking credit for reducing the SG&A expense. By far, the bulk of that reduction in SG&A was because of removing a Dell subsidiary, spinning it off, and selling it to Broadcom. Give management some credit for that. And yes, of course, they reduced advertising expense as well. Good on them. Well, since this does seem to be something that has happened before, as evidenced by that more than half a decade history of disruptive disputes with the American IRS that we found, kind of by accident, really. I wasn't looking for that, certainly. Well, I'm thinking it might be worth it to check out what other subsidiaries are floating around the animal cell that is Dell Technologies, just to keep an eye out to kind of, maybe if we see any of these in the news, we can kind of be prepared as financial analysts to understand that Dell likes to spin off subsidiaries to get little quick boosts to its income statement. And so here it is, the full list of Dell Technologies subsidiaries in alphabetical order. I'm sure we're going to skip most of the D's because there's going to be a whole bunch of like Dell things that are probably not going to get spun off. But the ones that don't share a name, that don't share the nomenclature, maybe some of those could get spun off. Maybe also keep an eye on the different countries that might get spun off from a geographic perspective. All sorts of Dell Company Limiteds. Skip. Basically a different Dell in every country on Earth. Skip. We're still going. We're now 4 pages in. Here we go. ECM, EMC, a whole bunch of those. Ubisoft, keep an eye out. Maybe they spin off a MoveSoft. I have zero. There's no rumor that they're spinning off, just part of the list. Newfound Investment Partners, DELL, that says Dell as well. Scale.io, SecureWorks, the Sichuan and Cheng Security Technology Company, BCE Solutions, VertisStream, and there we stop it. So really we've got SecureWorks, VertisStream, maybe an investment office or two, and MoveSoft, possibly EMC, although I'm not really exactly sure what that is talking about. So we've got 3, 4, maybe 5 different subsidiary groups that might be able to support future spinoffs. I wouldn't really call that an embarrassment of riches. Back to these earnings per share numbers, Dell has successfully avoided a persistent decline in its net operating margin. Remember, if they had not done what they did with the VMware spinoff in order to temporarily reduce SG&A this year, their net margin very likely would have been even worse than it was in the very bad 2% level that it was at last year. Instead, they have made it appear on their income statement like they went from a 5% net margin to a 2%, and now that there's been some revival, some 4%. We've just figured out together that this revival is deceptive, at least without digging into it on a deeper level. It is not a revival because of the underlying operations. It is a temporary boost to net income as a result of a one-time spinoff of a subsidiary. There are no announced plans that I'm aware of to do a similar boost in the coming years. And if Dell does try that again, they've only got about 4, maybe 5 more bullets in the chamber of what they can do that. Now that could be plenty of bullets for the next couple of years for sure. But it would leave Dell in a situation where it's essentially scrapping itself for parts, which the management has not indicated is their intention at any point of the annual report. And that, my friends, is the value right now in Dell. Potentially a play for competitors to entice, to tempt this management into taking the short-term route. If someone's trying to buy a MoveSoft, if someone's trying to buy a SecureWorks, seems to me like this is probably a better time than usual to make offers to Dell's management. They might be in the mood to hear you out. It's been really fun to work with the Sage Seeds artificial intelligence output to make this video. Please like and subscribe.